Welcome to FYI TV. My name is Sean Cook and we got a great show for you today. Now you know how all this Uber has reinvented taxis, Airbnb has reinvented hotels, all these different amazing technologies and millennials and all these creative people are changing the world that we live in. Well, today we are going to be talking with David Szymanski with US Mortgages, and he's going to be telling us how he's reinvented the mortgage business. Dave, good to see you, mate.
Yeah, thank you, Sean.
We have got a show for you. We've got so much stuff to talk about. We can't talk about it all. We were talking off camera just now.
Yeah.
We're going to talk about three things.
Okay.
David, you know about it, not me. I'm just getting educated. What are the three things we're going to talk about today?
Well, I know you wanted to bring up our Homemade Simple product. It's a unique product that we have right here in Colorado.
Right.
You also mentioned that you really love the fact that we reach out to help people going through tough times with our divorce resolution refi.
Right.
And last but not least, you wouldn't let me stop talking about our equity guarantee that goes for both a new home purchase as well as a refinance.
Now, the first one we're going to talk about is the...
Homemade Simple?
Homemade Simple means what, David?
Homemade Simple is our product that's designed to, take the fear and the mystique of buying a home from people that seems out of touch, out of reach, and make it reality, make it simple, make it tangible, and take it from that, I don't think I could ever do it, to I can't believe I did it. So one of the big misnomers is, you have to have perfect credit to buy a home. That's not true. People have challenged credit of all types. It's more than just the credit score. Credit score is important, and it is a piece of the puzzle. Yeah. But there's underlying risks. So there's things that a borrower may have that offsets it, so it's not just score alone. Like we've done purchases for people down to 530s and 520s.
You've got to be kidding me.
No.
I was told when I looked at refinancing my house, if I didn't have a 720, forget it.
Yeah, no.
David, that's what I was told. I believed it.
Yeah, well, there's a lot of people out there with bad information, and there's also a lot of people out there with the only information they have being what's dictated by the company they work for.
Right.
So maybe that company said, hey, we're not going to accept a loan unless this borrower has a 720 or above score. We've got a product inside of Homemade Simple that allows for up to a 5% grant. Grant is the key word here because it means you never have to repay it. They can literally get the down payment given to them. So not only are they buying a house.
On a $500,000 house, you're talking about...
Up to $25,000. We're assuming that you don't have money for a down payment.
Okay.
So we're getting that grant money assigned to you to make sure that you don't think that the American dream's for everybody but me.
Right.
So now I've got good credit, I've got a good job, but I can't get ahead. Let's face it, in Denver, most all of Colorado, it's expensive to live out here. So even if you're making good money, you may have $1,500, $2,000, $2,500, $3,000, whatever that number is going out for your rent, your utilities, toss in a car payment, maybe some student loans, maybe some credit cards. You may make good money, but while you pay your bills on time, where are you going to set aside $1,000 a month for the next 2 years to come up with $24,000 for a down payment, or $500 a month for the next 2 years to come up with $12,000 for a down payment? It's difficult. So what this does is it takes you, somebody that may not have the down payment money, and now let you qualify to buy your piece of the American dream.
Now, there's some tools you have on your website, because I looked at your website before this shoot. There are some tools you go there, and it doesn't cost anything. Just plug it in. You may be a candidate, and you don't realize. Because is it better? I mean, there's a different school of thought. Is it better to buy than to rent?
Oh, by far. First of all, in the last 5 years alone, Colorado's had, on average, 53% appreciation. Now, that's not just a number. That's real. So think about that.
Right.
So let's say you bought your house for $300,000 5 years ago.
Right, $300,000.
Got a pretty nice house. You're probably in a pretty decent area. Fast forward to today. That home is more than likely worth somewhere between $450,000 to $475,000, and it could be more because 53% is the average. Some people may be a little less. Some
so you're
people
talking
are higher.
about in 5 years, you basically your equity's gone up by $300,000.
Depending on the purchase price. So if it was a $300,000 home when you bought it 5 years ago, you're looking maybe somewhere in the range of $450,000 to $500,000.
So
you're talking about
$200,000.
$150,000 to $200,000, very real.
All right, folks, stay tuned.
At U.S. Mortgages, we believe that in order to have a friend, you need to be a friend. Even if you have less than perfect credit, we can help you get into a great loan that makes sense and saves you money. Purchase or refi. Our qualified mortgages come with our Home Safe Equity Guarantee. We protect your equity from potential loss at today's values. U.S. Mortgages is the only company in Denver that offers this kind of equity insurance. Call one of our experienced advisors now. U.S. Mortgages is rated A+ with the Better Business Bureau and is a 5-star rated company. Call us first. Plus, every one of our loans comes with a lifetime origination guarantee. That means you'll never pay origination or appraisal fees again. If you're a veteran, pick up the phone and let us show our appreciation for your service. Call U.S. Mortgages now at 720-598-5000 or visit www.usmloan.com, where you'll find some great tools to get started with your purchase or refi. Don't miss out. Act now.
So David, you're telling me 53% growth in the last 5 years.
Yep.
So on a $300,000 house, you're talking about 450, 500. So
yeah.
Folks, pick up the phone right now because you're missing out. There's people making $200,000, $150,000. That's only a $300,000 house.
Yeah.
A $500,000 house, you're talking about $250,000. You can't save that kind of money. That's how people build equity.
Yeah, it really is how you build wealth. And the crazy part about that is when you think about that and you do the math behind it, I mean, it literally is like taking $1,000, $2,000, $3,000, $4,000, like on the example you just mentioned, a month, and add it to your portfolio.
Right.
It's crazy. And to be sitting on the sidelines, thinking you can't do it, not be willing to try. We don't charge anything, so you're not going to get hit with any consultation fee. You're not going to get hit with any, I met you, I have to pull your credit report, I have to see if you qualify. None of that. So the only thing keeping somebody from finding out if they can buy a home is not calling or not going online.
Well, and it's a win-win for everybody, right? It's a win-win for you because you sell a mortgage out of it.
Yeah.
It's a win-win for the customer because they actually buy something that is increasing by 53% every 5 years, if I'm getting you right.
Yeah, that's what it's been for the last 5. You know, you don't know where it's going to go the next 5. But, you know, one of the pieces of that is I've heard the stories and the things about people saying, well, you don't know where the market's going to go and you can't always predict the future from the past. Right. That's fine. But we've got a product that'll protect you on that too, so there's no risk and no reason not to do something now.
Well, right now, folks, we're going to go visit with one of David's customers who's going to tell us how they built equity over a period of time and they didn't think they were going to be a candidate. Watch this, folks.
Once I got the email from Alex that said, you know, this is what you need to do to qualify. You need at least a 620 or above credit score. I knew I should be in the ballpark for that. Just seeing David Szymanski's ads on TV and everything, it was just like, well, he seems different than everybody else. National, local, whatever, and he was. Like his company is far and beyond better than any other company that I've ever tried to get a mortgage with or have gotten a mortgage with in the past.
Even if you don't qualify today, we're going to put you on a plan and a path of what it's going to take to get you to where you will qualify to buy a home as fast as possible. What we don't control is how engaged you are. How much do you really want to do this? Now, I can give you the roadmap and say to get from here to here, this is the move you got to make.
Right.
But I can't make you move. So some people we show they could get into a house in maybe a month, maybe 3 months. The next customer that is in that same scenario might take a year. So you're saying that you can actually,
okay, so you don't just take the customer or the person who's watching at home who comes in to talk to you, you don't just take them at face value.
Right.
You can actually say, okay, here's a program whereby in 3 months' time I can get you to qualify by doing, I mean, so how do you do that?
There's just, it's understanding what all makes up a mortgage loan, what all makes up the qualifications to get inside of the mortgage, and it's multifaceted. So you can't just look at score, you can't just look at income, you just can't look at the type of employment and the type of debt you have, because everybody's is a little unique. And that's the same way a credit profile is. It's almost like a fingerprint might be a better analogy. Everybody's is unique. You're not going to see the exact same profile on 2 people.
Right.
And what it does is gives us the insight that we can look at all the facets of the loan, how long you've been on the job, what your credit looks like. if you've had problems in the past, how far in the past, even if it's in the recent past, like in the last month or two, okay, it is what it is. You talking to us isn't going to change you missing a payment. But what it will do is it'll allow us to look at it and give you the insight of, don't beat yourself up over this. Here's what the delay is going to cost you. Here's what you can start doing in the interim. And here's where you can be in 3 months, 6 months, 9 months, whatever the case may be.
Now, does it make a difference the fact that it's your money that you're lending, as opposed to you having to conform to the rules as a broker and everything else? I mean, this is, you know, you've got to believe in the loan because it's your money.
Yeah, we do believe in the loan and we believe in the borrower, or we wouldn't make the loan. Part of your thing is correct. It gives us a little latitude. It gives us affordability to sometimes make a decision that somebody else may just say no to. But at the same time, we still have to conform to the underlying guidelines of the Fed. So where if, let's say, Fannie Mae comes in and says, you know, we won't let anybody do a loan with us that's had a late mark in the last 6 months, and we wanted to get your loan through the Fannie Mae product, then I'm going to be stuck to that 6 months. But even let's say you had your late mark and it was last month. Now we can look at it. We can assess, why do you want to be in this product? Maybe there's one that'll allow me to have one time late in the last 6 months, and you don't have to delay. Maybe that isn't an option, and because what you want has to be just perfectly crystal clean credit. And so now by clean, we're talking about a 12-month history under most circumstances. So let's say you had that late last month and you want a big amount of cash out, or you want to do a home improvement, or whatever it is you're looking for. We can go, all right, I can't do this until this time. I had a late in November. I got to be all the way to October or November next year before we can do something. But we can also give you the roadmap of things to do and not to do, so that when that piece hits its proper age, your loan's going to sail through like a warm knife going through butter.
Well, we've only got a half hour here, folks, so we cannot explain the whole thing. But I can tell you this, nothing's going to happen if you don't try.
At U.S. Mortgages, we believe that to have a friend, you need to be a friend.
If people do business with you, if you're at all you can, do business with them.
It took about 2 weeks to close on the house and about another couple of days until I had my money.
I want everything to be in line, all the ducks in a row, and they had all their ducks in a row.
I would like to thank U.S. Mortgages for their help, their time, and all the other things they've done for me. I appreciate it.
And now we have our dream home. And they make the process so simple that I don't want to go to anybody else.
I like doing business with people that want to take care of the veterans.
So U.S. Mortgages, in my experience, is a very well put together company, very well structured, and definitely will use them again.
To anybody buying a home, U.S. Mortgages is definitely top notch.
Go to U.S. Mortgages because they're dependable, and I trusted them with the biggest transaction of my entire life, and they really delivered.
Please visit USM Loan or call now.
David Szymanski has come out with a concept of how to get out of divorce without the gnashing of teeth and the attorneys and the everything that usually goes with a divorce. You've got, what do you call it, David?
We call it our divorce resolution refi. You're already going through a split. You're already in a very uncomfortable and for lack of better terms, probably potentially nasty situation. Even if it's an amicable split, you're still talking about splitting apart the family, splitting apart the equity.
It's a minefield.
It's traumatic.
It's a minefield.
Absolutely.
Who leaves? I mean, how does it go down usually?
Yeah, you got a couple options at that point, depending on the wherewithal of the borrowers. Maybe one can afford to stay there without income from the other one. Now I've got to figure out how much equity is in there, because your attorney's going to want to know. My attorney's going to want to know. The courts are going to want to know what is a fair and equitable split.
When you're telling me with what you're doing, you can sew it all right up there and then, and the spouse, the leaving spouse, whether it's the male, female, male, whatever it is, the person who's leaving can walk straight into owning a home?
Yeah, because if you do it right, one of the things is you're going to have to get a valuation of your assets. Well, if you've got stocks, bonds, income, that's easy. I mean, you're looking at a piece of paper, you can see what the numbers are. But with a home, that's a little bit more of an intangible. So they're going to want to get that better defined. They're going to need an appraisal on it. So since you're going to remove somebody off title, and this is under the premise of somebody's going to stay in the home,
Right.
you get the appraisal. Now that appraisal, if you've got that done through us, that's valid for any court. That's valid as a fair and accurate representation of the home is worth.
Right.
And so I'm just going to throw out a number. Let's say it's $500,000 or $300,000, whatever you owe on it that's below what the appraised value is, that difference is the equity. And so let's call it $50,000 is the equity in the home. So now you want to stay in the home, you want to get me off the title of the home. We do the refinance. We've got the proper valuation that's accepted by both
David,
parties.
I'm liking you more and more. So you basically come in there and say, here you go, here's 25,000, here's 25,000.
Yeah.
And you fix the problem.
Yeah, and then what happens is you stay in your property.
Yeah.
I leave with 25 grand for a down payment to go buy what I want to.
Right.
And as an added benefit, because we know you've got tons of expenses with attorneys and court costs and the division of assets, et cetera, we extend what we call our lifetime origination benefit, like as if you've done a loan with us once in the past, we don't charge you again for all the lender fees.
Okay.
We extend that to the person or both parties going through the divorce, even if they've never done a loan for us. So you won't pay origination, you won't pay for your
all
processing,
of those closing
underwriting.
costs, all that stuff, the hidden costs that there's always seem to be built into a mortgage. It's
Correct.
always, do you pay it or do I pay it?
Right.
But it doesn't exist.
Correct.
Wow.
At U.S. Mortgages, we believe that in order to have a friend, you need to be a friend. Even if you have less than perfect credit, we can help you get into a great loan that makes sense and saves you money. Purchase or refi. Our qualified mortgages come with our Home Safe Equity Guarantee. We protect your equity from potential loss at today's values. U.S. Mortgages is the only company in Denver that offers this kind of equity insurance. Call one of our experienced advisors now. U.S. Mortgages is rated A+ with the Better Business Bureau and is a 5-star rated company. Call us first. Plus, every one of our loans comes with a lifetime origination guarantee. That means you'll never pay origination or appraisal fees again. If you're a veteran, pick up the phone and let us show our appreciation for your service. Call U.S. Mortgages now at 720-598-5000 or visit www.usmloan.com, where you'll find some great tools to get started with your purchase or refi. Don't miss out. Act now.
That's an amazing, amazing solution to a problem that I'm not saying I agree with divorce. I think it's very sad. But
it is
if
sad.
you can come in there, if David Shemansky can come in there and broker a deal that makes everybody a little happier and doesn't send a whole bunch of money to the attorneys so they can fight over this stuff, I think you're the man. And we're going to have to take a quick break. When we get back, people, we're going to be talking about a way to insure your equity, which I believe is only offered by David Shemansky. Is that correct?
Well, only offered by U.S. Mortgages, that's correct.
In this market. And just to tell me just what and why is it only offered by you?
Because when I first heard of the concept, I jumped all over it and I said, this is absolutely fantastic, and I will pour money into it, provide it out, and make it exclusive so that if you want to do a loan, you want to protect your asset and your equity, do that loan with us, and we give it to our borrowers.
And what's the name of this one?
It's called Home Safe Equity Guarantee.
So we've been talking about homemade simple.
Yep.
Okay, that's basically dumb.
A way to buy a house.
A simple, stupid way to buy a house.
Yeah.
You can just go in there and that it comes with a lot of resources to get your credit score better. Come up with a plan. If you don't qualify now, you qualify later.
Sure, and not only help you qualify, gives you access to grant money for the down payment of your home.
Right.
And as one added perk and caveat to that, if you use the realtor group that's already signed up with us, they'll give you a 1% cash back at closing to help pay your closing costs and or help just have extra cash when you move or help pay moving expenses.
Well, I'm going to wrap it up for my cameraman.
At U.S. Mortgages, we believe that to have a friend, you need to be a friend.
And if people do business with you, if you at all you can, do business with them.
It took about 2 weeks to close on the house and about another couple of days until I had my money.
I want everything to be in line, all the ducks in a row, and they had all their ducks in a row.
I would like to thank U.S. Mortgages for their help, their time, and all the other things they've done for me. I appreciate it.
And now we have our dream home. And they make the process so simple that I don't want to go to anybody else.
I like doing business with people that want to take care of the veterans.
So U.S. Mortgages, in my experience, is a very well put together company, very well structured, and definitely will use them again.
To anybody buying a home, U.S. Mortgages is definitely top notch.
Go to U.S. Mortgages because they're dependable, and I trusted them with the biggest transaction of my entire life, and they really delivered.
Please visit USM Loan or call now.
All right, folks, thank you for staying tuned. My name's Sean Cook. This is FYTV. We're here with David Szymanski, the guru of the mortgage business with U.S. Mortgages. And David, you've got one more thing left. David's got a million things. We're trying to put 50 pounds into a 5-pound bag, and I've been trying to reel him in. Just 3 things. You've got a million other things, I know. But in this half hour, we're talking about 3 things. We've talked about
Homemade Simple, help you buy a house. Talked about divorce resolution refi, help make a very painful time a little less painful. And then, as you call it, the best for last, the Home Safe Equity Guarantee.
Home Safe Equity Guarantee. David, what is that?
Okay, well, in a nutshell, think of it like this. You had mentioned at one point, how would you insure a stock portfolio? You can't. How would you have anything that's an appreciable asset or an investment as a stock is, as a home is, and guarantee its value?
Well, it's a gamble, right? I mean, buying a home is a gamble. It's just like,
It used to be. It's not anymore. Denver's known historically, and most of Colorado is known historically as a boom-bust state.
Even I knew that. The gold rush comes,
and then it goes.
Silver comes, silver goes.
And then it goes, Home prices skyrocket, then they crash. As marijuana becomes legal, people flock into Colorado, house prices soar, technology, employment, opportunity.
So right now is boom time in Denver,
It is boom
Colorado.
time, and it's been boom time since probably 2010, 2011. Around 2009, the bottom of the market sort of finished, started seeing some appreciation.
Well, you mentioned earlier, 53% growth in 5 years. That's huge.
It is huge.
I mean, if you had $1 million house, you just made $500,000 in 5 years for doing nothing.
And think about it like this. So it's really easy to look in the past and go, I woulda, coulda, shoulda. But it's really scary looking forward and going, why would I do this? Denver especially has been on a boom for the last 7-8 years. At what point does the market top out? Which is why we brought out the Home Safe Equity Guarantee.
And which is why, unfortunately, we're trying to convince people, let's face it, to at least try and get a mortgage. And the people who hadn't got a mortgage may not be getting a mortgage because they're scared that, you're buying this at the peak of the market. What happens if it claps? I'm going to lose my down payment. I'm going to lose all of that work I put into the house. I put in a new kitchen. I just lost that. And are you trying to tell me, in all seriousness, David, you're trying to tell me that you can protect me from losing my down payment and losing the equity in my house?
Correct. And we can protect up to 100% of it based on today's value, and I'll tell you how. So the actual limit of the policy that covers this, the underlying policy that insures up to 20%, is based off of today's value. So for simple math, if your home was $500,000, 20% of that is $100,000. So how do you protect the other 80%? Well, the market's at maybe or maybe not its peak, close. Is there more appreciation to come? Maybe, but you don't know what's going to happen tomorrow. So even if you only owed $200,000 on your home, well, there's still a differentiator. So we can give you the loan up to $400,000, even though you may not need the $200,000 for anything. Insure the $100,000 equity piece, and now your home is insured and protected for full value.
Let's say I've got a $500,000 house. I just did a mortgage with you. I put 5% down, and all of a sudden,
you have to sell 3 years from now, and the market's gone down.
That's when this
insurance kicks in.
So this is a very real thing. So that's how you can quantify it. You say, okay, well, you paid X amount of money for this house. You put X amount of money down. You just sold it for this amount, and I'm going to get a check from the insurance company to cover that difference?
And here's how it works. Just to make everything a very level, easy playing field, is moderated by the FHFA index. It's
Yeah.
a federal housing index. And let's say today, and I'm going to do round math to make things simple. Let's say today that index was at 100 even.
Right.
And then 3 years from now you lose your job, or 3 years from now you get a job transfer and something is causing you to want to or have to sell that house. If that index has now fallen by 10%,
Right.
or in your case you said you put 5% down, if it's fallen by 5% or more, then when you sell your home, you selling it for fair market value. That $25,000 that you lose because the market has actually taken a hit,
I'm insured against.
you're insured against it.
You build up all this equity over time, and for most of us, that's a savings account for us. And the biggest challenge for me, and this has happened in the past, when the market changes, I have lost, 50, 75, 100 grand of hard-earned money that I put in to my home. With this protection program, this allows us to have the comfort of knowing that my equity is protected at current market values. And market values in Denver right now are through the roof. I like having the peace of mind knowing that my equity is protected.
Folks, when I say to you, this is the guy that's done what Uber did to taxi drivers to the mortgage company, I'm not kidding you. This stuff, I've never been excited in mortgages. I think mortgages, I hate to say it, not trying to be offensive, but they're kind of boring. But this is super exciting. And I know you can't absorb everything that we're talking about. I'm having a hard time absorbing it. I'm sitting here asking questions. But what you can do is go to the website and you can get a whole bunch more information. You can pick up the phone and talk to either one of the staff or to David himself and really get the lowdown on how you can get in on this business of building equity.
Yeah, building and protecting. So here's the great part about that, is not only are you insured for loss and insured for up to 10 years from now, you're also not restricted on gain.
Well, we've just scratched the surface.
Yeah.
And David, I just want to say thank you so much for coming here, and thank you for all you do. From what I hear, from all the people we've interviewed, all the testimonials, thank you really and truly for what you do, not only for regular people, but also for the veterans. But I genuinely believe that David Szymanski's a good guy, and I think if there's anybody in this city that deserves your business, it's this man sitting right here. So please call the number on your screen, and thank you so much for watching.
At U.S. Mortgages, we believe that in order to have a friend, you need to be a friend. Even if you have less than perfect credit, we can help you get into a great loan that makes sense and saves you money. Purchase or refi. Our qualified mortgages come with our Home Safe Equity Guarantee. We protect your equity from potential loss at today's values. U.S. Mortgages is the only company in Denver that offers this kind of equity insurance. Call one of our experienced advisors now. U.S. Mortgages is rated A+ with the Better Business Bureau and is a 5-star rated company. Call us first. Plus, every one of our loans comes with a lifetime origination guarantee. That means you'll never pay origination or appraisal fees again. If you're a veteran, pick up the phone and let us show our appreciation for your service. Call U.S. Mortgages now at 720-598-5000 or visit www.usmloan.com, where you'll find some great tools to get started with your purchase or refi. Don't miss out. Act now.